Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Cucchiara.
Welcome in. Good afternoon. Joe Cucchiara with Real Estate Radio Live. Thank you for tuning in and joining today as we start off our shortened week with the holiday weekend just past us. Hope everybody had a relaxing, enjoyable, and safe time. Just a reminder, we are with you 5 days a week, Monday through Friday from 3 to 4. And you could tune in a couple different ways and listen to us. One is on the radio, KDOW 1220 AM. You could also listen to us live online if you go to the radio website at kdow.biz and listen to us via podcast. That seems to be one of the popular ways that people are really starting to generate the interest, and I could see it. I mean, in a fast-paced world where everybody's busy, it's difficult to think that, people, not everybody has the convenience and the time, the luxury to listen from 3 to 4. So because of that, the podcast has been extremely popular. We're getting several hundred downloads a day, new downloads each day, and that's good news because that means people are listening to the show when they can, and they're tuning in, and they want to hear the information on a regular basis. So we thank you for all those that are downloading the podcast. If you want to do that, you could go to reradiolive.com. Again, that's reradiolive.com. We're a live show. We love your calls and questions. If you have any of those today, two ways to communicate with us. One is the toll-free number, 1-800-516-1220, and you could also text your questions in at area code 408-838-9060. If you're listening to this via podcast, the best way to communicate with us is 408-838-9060. What we're going to do is first couple segments today, it's going to be open lines. The topic is going to be the 4 most popular reasons people are refinancing today their home. And we've had similar topics, and I've had some similar topics the last couple of weeks, and I'll tell you the reason why. Not to sound redundant, but I really want to make sure that people are tuned in. Everybody's busy. There's a lot of stuff going on. It's amazing how many people I still get emails from. I just got 2 today. Joe, I've been meaning to call you. I know I've been getting your notifications about rates being near all-time lows. Give me a call. It's time to do this. And my point is, the reason why I'm bringing it up again is because you would think by now that people have done what they need to do and secure a good long-term rate because these rates are near all-time lows. But people get busy and things happen, and then you forget. And yeah, you might hear it on the news from time to time. Rates are low, but then you're thinking, well, gee, wait a minute, I got interest rate of 4% a couple of years ago, and I thought that was pretty darn good, and it is pretty darn good. But right now, depending on your loan amount, if you're at 417 or less and your credit score is good and your loan to value, there's a lot of factors into it. But, you could get 30-year money for right around 3.5% at very minimal or no cost, depending on a lot of the factors, which we don't know until we look at your personal profile. But the money is super cheap. Today, I quoted some people a 15-year fixed. And you're looking at numbers well below 3% now. Yeah, 2.75%. 2.75%. Again, that will depend on loan to value, credit score, but average, we're talking about loan amounts at 417 or less, and rates are outstanding. So we're going to talk a little bit about that in the first 2 segments. And the last couple segments, we have our visitors back from Fizber. We're going to have P.J. Mitchell, who's the COO with Fizber. He's going to join us, talk a little bit about the marketplace, what's going on, the changing dynamics in the real estate market. So we will invite him in right around 3:30 or so. So let me go through the 4 top reasons that we're seeing in the marketplace that people are taking advantage of the refinance and maybe one of these or several of these fit, but I'll go through them quickly. Number one is really just to reduce the interest rate. I just mentioned before, some people would say, well, gee, I got a 4% interest rate, but if you have a sizable loan, if you have a loan of $400,000 or $500,000 and you can get that rate down to 3.5% for minimal or no cost, depending, that's a significant savings if you're going to be in the home for a while or own it. So that's number one, just reduce the interest rate. Number two, what I'm seeing a lot of, and I don't blame them, I would be doing it now too, and that's consolidating a first and second. Let's say you've had a home equity line of credit out for the last several years of $100,000, $50,000, $200,000, whatever it may be, for whatever reason, and you have a pretty decent rate on your first. There's a very, very good chance that you can consolidate those two and really keep the same interest rate you have now and maybe improve it on your first. Believe it or not, it's happening a lot. So again, number two is consolidating a first and second. I know a lot of people love the home equity lines and I have them too. I understand. I do. They like the I don't know if it's security or the sense of having a home equity line, even if there's nothing on the balance, because if something comes up, if they need cash for an emergency or something, they could draw on it. It's a great idea. But if you hold a balance, you're paying on that interest, and we're not going to see, my guess is, we're not going to see interest rates go up this year. Certainly we'll see them probably sometime next year, could be in the second or third quarter. We'll keep a monitor on that as we move forward. But number two, consolidate a first and second. If you're carrying a balance on your second, I would highly recommend that you consolidate the first and second, unless you have a plan to pay off that second in the next 12 to 18 months or so. Number three is taking money out to remodel or add on. That is another popular move right now, and the reason why is because home equity has grown. Appreciation has grown. People are feeling pretty confident about their homes, especially if they're going to be in it for a while. So why not take $100,000, $150,000, $200,000, what you need, and maybe add on, add the kitchen, the bathrooms that you've always wanted, or maybe do an addition. That's happening quite a bit as well. Number four is change to this is a really popular one right now as well, change to a 20-year, 15-year, or 10-year. So in other words, if you've been in a 30-year fixed and you've refinanced several times, a lot of people that are keeping an eye on their finances, and I think this is great, and I talk about them with it all the time. First thing I'll ask people is, how long have you had your loan? Well, I've had my loan for about 6 or 7 years now, Joe, and I don't really want to go backwards. And some people will say, it doesn't matter, I just want cash flow, I want to take advantage of the low rates. That's fine. Others will say, I just don't want to go backwards, and I understand that. So this is great. A lot of people don't realize you could go from a 30-year fixed, and maybe you've already had the loan for 6 years. Let's look at a 25-year, a 20-year, a 15-year. We even have 10-year amortized loans. I have a client looking at it today, below 3% for the 15 and the 10. The 20 and the 25, the rates they're probably in the most of the time going to be similar to the 30, just because there's not a big shift there, and there's not a big demand in the marketplace for 20 and 25-year amortized loans. There just aren't. So, but you're probably going to get the same rate, maybe a little better. But the idea is you're going to save a lot of interest. If you've been in a 30-year for 7 or 8 years and you don't want to go backwards, let's look at a 20-year for you. And even if you get the same interest rate we have today, you're going to, start with a 20-year amortized loan. You're not going to go backwards. And the last one is to take money out to invest in another property. We're seeing people do that. We've talked last week. We had a great topic about alternatives to selling your home. This kind of goes in that same, basket, if you will. There's people that are they have a lot of equity in their home. They're going to keep it for a long time, and they're looking at investing. I've seen a lot of people looking at investing in other states, and believe it or not, you can get single-family homes, duplexes for $200,000, $240,000, $250,000. I know it's hard to believe around here. You'll never see those around here, but you can get those in other places. North Carolina, Texas, North Dakota, a lot of different places that we're seeing many people invest in properties outside of California, and they're getting cash flow. Those plays are not really so much for equity growth as much as they are for cash flow and long-term cash flow. A lot of people will hold on to, they figure a small loan, and it could be paid off in 10, 15, 20 years maybe, depending on how much your age is. And you have some good cash flow. And they're very strong rents out in those areas, so that's a popular one as well. And those are the the 4 or 5 reasons that we're seeing people refinance. So if you have any questions about that, maybe you're considering a refinance, maybe you're not sure about your equity, your credit, that's what we're here for. Answer any questions you have, 1-800-516-1220, and you could also text the questions in at 408-838-9060. It looks like we do have a text that I will read. I'll either get it to that question before we finish up this segment or when we come back for the next segment. What we're going to do is finish up this segment, and as I roll into segment 2, I want to talk and just remind the buyers out there again to get out there and get back on the horse and go. And what I mean by that is there's been a lot of discouragement the last couple of years because it's been a really strong seller's market, which means you've seen a lot of clients get discouraged. They've been outbid. The other thing I want to bring up, please listen to me when I say this. Don't let anybody tell you that you're not going to get an offer accepted just because you're putting 5% down or you have an FHA or you're putting 10% down. There's a new program out there called HomeReady I want to talk about too in segment 2. HomeReady is another alternative to FHA financing. There's some great benefits to this program. And depending on where the zip code is and where the place is there's no income limitations. In other words, some of these programs will limit your household income, whether you could be considered for one of these programs. So what I'm going to do is we're going to wrap up segment 1. When I come back, I'm going to talk more about the HomeReady program and getting out there, having those buyers get back out there and get aggressive, put in some offers. The market has changed, and I think you would be surprised. All right, quick break. We'll come back. We're going to finish up with these topics, 1-800-516-1220, or you could text 408-838-9060. This is Joe Cucchiara with Real Estate Radio Live. We'll be back with you in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadio.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you for joining us this afternoon. Joe Cucchiara with Real Estate Radio Live. First topic, we covered the 4 most popular reasons why people are refinancing, and I will, at least once a week, I'll be reminding those to take advantage, only because I could tell you I've been down this road before, and 4 or 5 years from now, if you failed to take advantage of these interest rates, you will be sorry. I don't think they're jumping up anytime soon, but take advantage of them. We have gotten so used to them. Here's my fear. My fear is that we've become jaded, and we think they will be here forever. That won't happen. It will not happen. When they go up, trust me, they go up fast. There's none of this little bip, bip, bip up. When they go up, they will jump up, and they will jump up maybe 0.5 to 1% in a short period of time. Believe me, whether it's this time next year or late next year, I don't know when it is, but I do see interest rates possibly being somewhere in the mid to high 4s in the next year and a half, which is still not terrible. But they almost have to go back up. They really do. When I say that, there's no guarantee that it's going to happen. But as we sit here, we're September. We're rolling into the last quarter, getting close to the last quarter of 2016. I really think somewhere in 2018, somewhere in a little less than 2 years from now, we will be at somewhere right around 4.5% or even higher, which is a full 1 to 1.5% where we are now. And that is a big, big difference when you're buying a home or refinancing your home and getting some money. So quickly in this segment, because we have a guest coming on in the next couple of segments, I want to talk about the buyers to get back out there, be aggressive. Get a hold of your real estate agent. If you don't have one, give me a call. I could refer you an agent. I think it's extremely important for those people that have been out there the last couple of years and you've been discouraged to really get back out there. Number one, in some cases, the rates are a lot better than they are now than they were a year or so ago when you were looking. That's one thing to consider. The other thing is the market is changing. It's flattening. It's leveling. And what that means is you're not getting all the crazy multiple offers in many cases. You're actually having some time where you could go in. And listen to this. We're now seeing contingent offers where before people said, nope, no contingent offers. We're now seeing contingent offers. What does that mean? You now could go out and look for a home and realistically possibly put an offer on that home with the contingency of selling your own home. In other words, people weren't accepting those before because there was too many offers. People are ready, not only cash offers, but they've already sold their home and ready to go. Now it is conceivable that you could find a home first. The minute you find that home you love, put your home on the market, and then you draw up a contingency offer with your realtor. It's going to happen. It's starting to happen more and more. So the buyers, get out there, get back on the horse, get going, and see what you could do. Along the buying process, I want to mention to you, some of you may have heard it, there's a new program that was offered, and it's been out for a while, and it's the HomeReady program. A lot of people don't hear about it in the Bay Area, and here's why, because the housing price is a little higher, obviously. And lately, because the last couple of years, there's been a seller's market. You don't dare go in. It's sad, but it's true. You go in with a 5% offer. a 5% down loan. They're going to say, sorry, we have all these other competitive offers, and we can't take the risk. That is changing. That is changing. You now can go in and make an offer, and it doesn't matter if it's 5% down. You have a better chance now than you have in the last 2 or 3 years. Believe me, give it a try if you're ready. HomeReady program. Give me a call if you have any questions about it. Basically, quick summary. 3% down to compare it with FHA. FHA is 3.5% down. Here is the huge thing with the HomeReady program. No upfront MI fee. No upfront fee. FHA has an upfront 1.75%. Which, if you're getting a $500,000 loan, that could be $7,500 up front that you're going to pay, more than that even, as it's going to be tacked onto your loan amount. The HomeReady program does not have that. Now, you do have to pay a monthly MI, but it's a lot less than the FHA MI. And here's the exciting thing, too, about this HomeReady program. There's income limitations, but they're pretty good. And in some areas, depending on where the home is and the location is, there are no limitations. So you could conceivably be a person making, let's say, $250,000 as household income, and you could qualify for this 3% down loan. That's right, you can. You 3% down. You could qualify conceivably if the home is in the right location. Now, some of the locations require, in the Bay Area, it's typically about $110,000 to $115,000 household income maximum. Okay, so just to be fair, some of the areas do require that, but some do not. So if this is something you're thinking about, give me a call, and we could check it out for you. 408-838-9060. Again, 408-838-9060. If you have any questions about this HomeReady program or getting back out there and making a purchase. Those are the things that I really wanted to summarize. So as we close out segment 2, the next few segments are going to welcome in our guest, who is P.J. Mitchell, the COO of Fizber. We're going to be talking about the real estate market, some of the changes. But as I roll into segments 3, 4, and 5, remember, give me a call if you have any questions about refinancing or purchasing and the HomeReady program. 408-838-9060. Get us live, 1-800-516-1220. We'll be back with you in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you again for joining me this afternoon. Joe Cucchiara with Real Estate Radio Live. We're with you 5 days a week, Monday through Friday. In just a minute, I'll invite my guests in, but I just want to get back real quick to a text from our previous segments. Got a great question via text, and the question was, Joe, I'm refinancing. I'm in the process of refinancing. Should I take out $50,000 now or do it with a HELOC because he's planning on doing some remodeling? It's a great question. I would say, and I answered to this person, definitely take it out now, because the problem with the HELOC is if you take it out again, that's adjustable money, and rates are good right now, but who knows where they are in the next couple of years. So answer the question, a great question. I love getting questions from listeners and callers because, you know, this is what the show is for, is to educate and inform, and we want to try to help you make wise decisions in and around your real estate every single day. So great question for the text, but definitely if you know you're gonna remodel and you know you're gonna use that money, take it out now. Secure that long-term low interest rate instead of worrying about that adjustable. All right, let's move along. Let me invite my guests in. They were here last week with us, and it is Don Shab. Shab, he is the brand ambassador with client relations with Fizber, and also PJ Mitchell, the COO with Fizber. Welcome in, gentlemen. How are you doing today?
Very well. Thank you, Joe. Thanks for having us.
Yes, doing great, Joe.
Good to have you guys back. Before we get started, we have some nice talking points today. We're going to talk about the market, the real estate market, kind of some of the changes that are taking place. But if we can, gentlemen, for the sake of the listeners who maybe are just tuning in, if you guys could each give a bit about your background and your current roles and responsibilities with Fizber, that'd be great.
Great. I'm the Chief Operating Officer of Fizber. This is PJ Mitchell. My background, just briefly, is for about 10 years I ran the operations for a real estate investment firm that bought and sold properties across the United States, and then was brought on and have been running Fizber since 2012.
Very good. Thanks, PJ.
And I'm Don Shab. I'm the brand ambassador for Fizber. I've been here a little over 2 years. And I've been involved with unique services and products my whole entire life. And I think I found a really nice home here. It's been a blast. And I think I mentioned last week, I do a little radio on the weekends, Joe. So I love listening to your show and love being on the radio, too. So it's all good.
Yeah, fellow radio personality for sure. It's a lot of fun. And you guys know that we've talked about it before. I mean, one of the things that I enjoy so much about radio is a couple things. One, meeting people like yourself, getting to interview people, learning more. That's a great part of it. Probably the most important thing for me is to be able to continually pass on information to the consumer to just, help them make wise decisions. It's pretty simple. That's really our objective, and I know that you guys feel the same way in your business. Absolutely. And what you're doing is really just an educational process, isn't it?
Right, and radio is an
absolutely.
effective medium. It's an effective medium, Everybody keeps saying it's going to change, and we know all these other things that are out there in radio, but, people listen. They dial in. In this case, to 1220, and, wherever we are down here in Southern California, it's great. You get a lot of feedback, and it's all constructive, so it's a really good place to share information.
Well, let's talk, you guys, again, remind people, tell us a little bit about Fizber and then, about the company, the model, and then more importantly, why the company started. We have a little less than 2 minutes, so if we get started with that, and then we can come back after this break and then continue.
Perfect. Yeah, so Fizber, it's actually been around since 2006. It's essentially, like many for sale by owner websites that were out there at the time where you could list your home, you go on Fizber, create a quick listing, and then it would display on that site and kind of stay there. We saw that there was a real big opportunity to help home sellers better use technologies and platforms like Fizber. So we bought the existing platform, relaunched it in 2013 to really help folks, And so, where we see the opportunity is FSBOs in the past have really relied on yard signs or putting their ad in a newspaper to get the word out about their home. But the industry is changing, and where consumers' eyeballs are, it's really shifted. The National Association of Realtors, recently reported that 92% of buyers utilize the internet in their home search. So this growing trend, really makes it essential for sale by owners to have, easy to use tools at their fingertips to market their home, on these different platforms where these folks are looking for homes. Fizber does that.
Yeah, it does. And what we're gonna do is take a break, and we come back. We're going to ask both Don and PJ a little bit more about kind of what's going on in the industry. Are they seeing changes? If so, what kind of changes? What are people looking for? Some of the systems, processes, and much more. So if you have any questions for either one of these gentlemen, 1-800-516-1220, or you could text the questions into 408-838-9060. This is Joe Cucchiara with Real Estate Radio Live. We'll be back with you in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you again for joining me this afternoon. Joe Cucchiara with Real Estate Radio Live. We have on the line with us our two guests, Don Shab. He's the brand ambassador, client relations with Fizber, and also PJ Mitchell, the COO of Fizber. They both gentlemen kind of told us a little bit about why they kind of relaunched the site in 2013, having a lot of success, but wanted to come back and ask them now. Tell us a little about the listeners here, you guys, the kind of the state of the industry. I know that all around us, I don't care where it is, and especially here in Silicon Valley where we live and breathe and work, we see changes. We hear technology. There's all kinds of dynamics changing. I realize it's one thing to see technology and system change, but there is also another component, and that's consumer behavior and what I call consumer, kind of timing acceptance. Tell us, if you will, you guys, a little bit about the marketplace and how things are changing a little bit in the way people look at the real estate transactions.
Absolutely, and you nailed it, Joe. I mean, you guys are in the heart of it right there with the technology. But the consumer behaviors, that's what's really driving these things. As I mentioned earlier, 92% of people are starting and utilizing the internet in their home buying search. When you look at the trends, in 2001, and this is a really, crazy number, is in 2001, 8% of buyers found their home themselves, through various efforts, whether they saw a yard sign or they found an ad. In 2015, which this is the latest, bit of information we have from the National Association of Realtors, 44% of buyers found it on their own. And that's in comparison with 33% of people were introduced to their home that they eventually bought by a real estate agent. 44% this last year actually found the home themselves online and then, contacted a real estate agent and said, hey, show me this property. The consumer behavior is definitely the trend of wanting to do it yourself, wanting to search and look at data, look at homes, just from the comfort of your own home. That's growing. And so there really is a huge opportunity, more now than ever, for sellers to be empowered and to have the tools and resources to be able to get your home in front of those folks.
Yeah, a lot of as we know, most a lot of information was either kind of locked up or secured, and that's probably not a good way to. But for example, before, years past, you'd have to contact the real estate agent. They kind of controlled the MLS and where information was distributed and put out. And now what you're saying is that's no longer the case. Matter of fact, 92+% people go to the internet first. They search for areas. They look area specific, neighborhood, schools. So a lot of times is what you guys are saying, I guess, is what I hear. They're armed with much of this information before they make a decision who they're going to work with. Is that correct?
Absolutely, absolutely. And I mean, it's not relegated to just real estate. You can do that with cars. You can do that with, anything that you plan to purchase anymore, right? I guess we all have to thank Al Gore for creating the internet or something. But
good old Al.
But one thing that's interesting is the way the real estate has evolved is there's a lot more information that's out there. Most of the information and most of the listings that consumers are seeing are listings from agents. And that's what most of these platforms are, is they aggregate all these listings from these agents and MLSs across the United States. And so that's set the buyer's expectation and consumer's expectation of, hey, I can view this information. But people aren't really executing on the ability to, as an owner of a home, to leverage that and to get your home out there, amongst the other listings that are listed by agents, get your home out there as well, represented by yourself.
Mm-hmm. Yeah, no, very, very good point. So over the last couple of years, since you guys, I guess it's been roughly 3 years now since you guys relaunched and kind of took this over and started. How many, roughly how many homeowners have you helped in that, that approximate 3-year period now?
Over 55,000. We're just over 57,000 listings right now.
57,000 listings. And how many of those have actually turned into transactions over the last couple of years for you guys?
So across those listings, we've seen a little over 20,000 are actually people that have closed. And of those, when you look at the data, for sale by owners, the percentage of folks that have been successful selling for sale by owner, as you look at the entire market, it's about, it's always been just under 10%. What we've found, what we're really excited about, is that not only are our listings growing, but the people that have transacted, 30% of those folks have sold for sale by owner. So they come on our platform, and there's a number of reasons why they are successful or they're not successful. But we're seeing that people are much more successful through our platform than through the traditional ways of marketing your home for sale.
Got it. And the other thing I want to talk to you guys, have you speak to, is because traditionally, I think one of the things that concern people, and we'll take our last break here in just less than 2 minutes, but I'll have you speak to this and we'll take our break, is that, the for sale by owner sites and marketplaces, really what happened is that, some people still needed help. They needed some assistance. And, they could do maybe some of it by themselves, and they're comfortable with some things. But in other cases, in past times, maybe they wouldn't have that alternative to reach out. But you guys also have partnered with real estate agents in all these specific areas to reach out and actually get some help if they need that, correct?
Absolutely. We want to be the one-stop shop for home sellers. So you have nothing to lose by trying to do it for sale by owner. And many thousands of our users are successful selling their homes, saving money. But we have products and solutions for sellers in every kind of stage of life. So, there's many reasons, like I said, why homes don't sell. Perhaps a home seller runs out of time. They're up against, different factors that they can't really control. They just, say, hey, this just isn't for me. There's too much work involved. If any of those things happen and someone just ends up throwing in the towel, well, we have, a local expert there that we've partnered with that can help them. And, so we want to offer the best solutions. If you end up having to go with an agent, well, we have that solution for you. And not only do we have it for you, but we partner with the best agents that can sell your home quickly and can sell it for more money than others can.
Very good. All right, what we're going to do is take our last break. When we come back, we're going to finish up. If you have any questions for Don or PJ, now's a good time to check in, 1-800-516-1220. And also, I do see a text here that just came in. I'll read that when I get back, 408-838-9060. We'll be back with you to finish up in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchiara.
Welcome back in. Thank you again for joining us this afternoon as we wind down the show. Just a couple minutes left here. I've been joined by our guests for the last few segments. Don Shab, he's the brand ambassador and client relations with Fizber, and then also PJ Mitchell's alongside. He's the COO for Fizber. Gentlemen, just a couple minutes left. I wanted to, what do you expect this trend? Do you expect much of the same over the next couple of years? I mean, as we sit here today, you cited some statistics, both PJ and Don, about where consumers go to get their information, what they do with it, what they're comfortable with. Do you see much of the same? Do you see any other changes? Do you just see it going in this way and just a bigger percentage of people? How do you see that the next couple of years?
Yeah, I think absolutely. I think it's going to grow. Consumers' expectations, obviously, the information's there, available today, and their hunger and kind of thirst for more information is just going to grow. And so it definitely is going to evolve. And, and I think more people are going to have the confidence of, hey, this is an actual viable way to sell my home. I can actually, put a home, a listing online and get the exposure, and I don't need to worry about kind of having a backup plan or worrying about anything else. Got it.
Hey, quick question for you guys from a text that I got from a listener before I let you go.
Yeah.
The question is does it matter if it's a primary residence or a client that has it's talking about, it sounds like an investment property in Southern California or any parts of California. So I guess their question seems to be, it doesn't really matter what type as long as it's a residential property, right?
Yeah, absolutely. Right now we're just focusing on residential, so whether that's owner-occupied or investment, the savings is real regardless of what the actual tenant is, who's occupying the property, but the owners, they can list their home as long as it's residential and save some money.
Great. Well, before we go, one last thing. Average-wise, I know you guys, so average in California, of course, our listeners are in the Bay Area, Northern California here. What have you guys saved kind of, individually in California over the last couple of years per transaction?
For those who have sold on our site through Fizber.com, on average, they've saved $18,000.
Wow. That's a big savings.
That is big. That is big.
Yeah,
no,
and I think one thing just to clarify with that too is, obviously that's the approximate number, and in the Bay Area there's higher priced homes for sure.
Sure.
But a lot of people think, when I sell FSBO, does that mean I'm not paying anything? And I think one thing to recognize, you mentioned realtors earlier on in the segment.
Correct.
But with Fizber, what we do and what we're really good at is we assess the market that these home sellers are in. So in some markets, the market's fluid enough where, you could get good exposure by putting your home online. You can save money. Other markets, it makes sense to leverage buyer's agents who represent, actual buyers that are out there.
Yeah, I don't want to cut you guys off, but just a few seconds left. We got to go. Just if you could let the listeners know your website.
Sure, it's Fizber.com, Fizber.com. That's Fizber.com.
Great. Thanks, guys. We'll be back with you in a couple of weeks. Take care. Have a great afternoon. Joe Cucchiara with Real Estate Radio Live. Thanks for tuning in, and be sure to tune in back tomorrow. We'll have a great afternoon. Take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Tune in, log in, download our podcast. Discover more at RERadiolive.com. RERadiolive.com.